Hello all, welcome to www.bispsolutions.com. In the webinar series of financial planning using Excel, today we'll see common size analysis. Common size analysis is a powerful tool in financial modeling, helping businesses and investors standardize financial statements for better interpretation and decision making by expressing each line item as a percentage of a base amount. This analysis helps to understand the impact of each item in the financial statements and its contribution to the resulting figure. Let me make this more clear to you with the help of a user story. Now, Martin is a financial analyst at an investment firm. He needs to analyze multiple companies' financial statements. Since companies differ in size, absolute numbers can be misleading. So, using common size analysis, the analyst can compare the financial performance efficiently by expressing each line item as a percentage of total revenue or total assets. Now, this Martin, he is a financial analyst, and he has to compare between hardware heaven, one company, that is firm A, and we have a firm B as tools depot. He has to analyze the profitability of both the firms, whosoever is making more revenues. So for this, he would see the common size analysis. The first step he would do, he would first collect the financial data. That is, he would gather income statements and balance sheet of both the companies. Then he would convert them to common size format, where he will have common size income statement, which will express each line item as a percentage of total revenue. Also, he would convert the balance sheet to common size balance sheet, where he would express each item as a percentage of total assets. Once he finishes this analysis between the firm A and firm B, which is firm A is hardware heaven and firm B here is tools depot. So you can see in the pic on the right hand side, the first one over here is the income the data, revenue and the profits which of firm A and firm B before the analysis, common size analysis. So if you see, firm B is showing over here less revenue and profit. So after common size analysis, he will assume that company A has a higher gross margin, that is 55%, than company B, indicating stronger pricing power or cost efficiency. Company B spends 30% of revenue on marketing, while the industry average is 20%, suggesting possible overspending. Company B has high debt to asset ratio 70%, which signals financial risk. So after such kind of common size analysis, he would make the investment decision. So he decides to invest in company A as it has the strongest profitability while maintaining a healthy expense structure. So now we can list down the key benefits of using common size analysis. There is improved comparability. Now, standardized financials allow fair comparisons between companies. It is an excellent tool to compare companies of different sizes but in the same industry. Now, looking at their financial data, One can reveal their strategy and their largest expenses that give them a competitive edge over other comparable companies. There is trend identification. So, by highlighting the inefficiencies, cost control issues, and profit margin, one can identify the trend of the company's behavior. Next is risk assessment. So, with the help of common size analysis, companies may flag high debt or excessive spending. Certain other issues can be flagged, which would be having potential risk to the business. Lastly, better investment decision. So, common size analysis helps pick the company with the best financial health. It allows investors to identify large changes in a company's financial statements. It mainly applies when the financials are compared over a period of 2 or 3 years. Any significant movement in the financial across several years can help investors decide whether to invest in that company or not. So, as a summary in a bottom line, I can say that common size analysis, it allows investors to identify large changes in a company's financial statements, as well as the ability to compare companies of different sizes. So, we'll do the common size analysis. Now we'll start. Before that, I'll show you the formula. Percentage that we're going to calculate would be the amount of individual item divided by that amount of base item multiplied by 100. So for balance sheet, the base item will be assets, while for income statement, your base item would be your sales. So over here I have downloaded the financial statement of Nestle India Limited with the help of screener.in. I have here data sheet which has the profit and loss starting from December 15 till we go to for 10 years, you may say, like December 23, March 24 is also there. So profit and loss statement I have, and I have the balance sheet statement. Over here the figures are for the total assets, total liabilities I have for the entire 10-year period. This is the financials of Nestle India Limited downloaded from screener.in for last 10 years. Now let's calculate the common size analysis statement with the help of this data. So over here I'll make it dynamic. We just have to provide the title over here, which is common size income statement. And to make it dynamic, that every time you change the company over there, the data from other company, the sheet name of the sheet will change accordingly. So this is the syntax you're going to use to make the heading, the title here, as dynamic. Now here you have written common size income statement, and we'll pick the sheet. This is there over here, data sheet, and from here we pick the name. And here I'll remove this, or we can just keep it. Over here let's start with the particulars. Let's bring the date from the same sheet so that we don't have to hard code it. We will just remove the dollars over here so that it doesn't become static, and we can move it across the other cells. And here I will make it as short date, and if you do not want the date in this way, you can again custom it, and we can have the date as month and year. Let's copy it across. So we'll do for the last 10 years till December 23. Just highlight the topic over here, and you can even bold it, and this is done. Now I'll bring all the particulars from the P&L statement. So again we'll make it as dynamic. We're not going to copy it. And I'll scroll it down, or you can copy it till net profit. You can also include the dividend amount. Fine. Now that we have created the sheet, this is how we're going to start the work. We have brought all the years that we want to compare, and from your income statement we've copied the entire particulars. Now let's calculate sales over here. So every line item, see, I will show you the formula again, once again here in the slide. The individual item would be divided with the base item every time. For income statement, the base item would be your sales. So let's apply this formula on the line items over here. So this is your sales. Okay, this divided by sales here. Make sure that you remove the dollars. You do not want to fix it because you're going to scroll it across. Only the one you're dividing it, that is, you're going to divide it with B17 at B or C, you're going to divide with the sales, respective sales. So we're going to make only the 17 row over here as dynamic, rest all we're going to make it as static. So that's it. Now we'll find the over here, if you see the raw material, what you can do, you can just copy it over here. If you see this, B18 is divided by B17, that is, over here your B18 is divided by your B17. So simple as that. You just have to copy the entire formula, Control C, and drag it or copy it to the entire table here for all the years. Just select the entire table. Now we'll convert this all into percentages, and these are all into so many decimal places. We'll make it into readable format. For that, Alt HP, Alt H0, and one more decimal, Alt H0. Fine. Okay, unbold the entire thing. We do not want, we just want the sales over here, which is your base figure. This should be in bold. Okay, so this is done. Now over here you have converted the entire income statement from December 15 to December 23. You've converted all the figures into percentages, and that also common size percentages. Common size in the sense this is divided with one base item, which is sales over here. Now let's come to your balance sheet part. We'll copy the entire thing from here. I'm copying so that I do not want to write it again and format it again. You can copy it straight away. The only change here would be your balance sheet. So just select this, your income statement, and you will write here balance sheet. So as we have made the heading dynamic, it is getting the name of your whichever firm you are doing. We are doing it for Nestle India Limited. Now there are this has got disturbed. This is not B37 because we haven't added the dollar over here. This is actually B16, so I'll make it as B16 and we'll copy it across. That's it. This is done. Now again we'll bring the particulars of your balance sheet over here. We are into the data sheet of Nestle India Limited. Below P&L statement I have balance sheet. From here I'll copy the particulars, remove your dollar sign over here, and I will copy it below. This way I get the entire balance sheet. But here, as you can see, I'm not finding total liabilities. In fact, it is written over here. So rather than that, I will make it on the top. See, from wherever you get your you download your statements, financial statements, which is you've gathered certain data to analyze. If that data is not in the particular format, you will not change the particulars or the formatting of those files. Wherever you are creating your own common size analysis sheet, you're going to change the formatting or the particulars or any sort of arrangement in that sheet. So here I will delete this. It's not required because here on the top we have provided total liabilities here. Okay, this I'll bold it. Now over here, this is the asset side. So again I will insert one cell, one row over here, and we'll make the total assets here. So now that makes sense. Here this is the block for total liabilities and this is your block for total assets. Always total liabilities in the balance sheet will be equal to total assets. If not, then there are certain calculation errors which we have to check into. The first one over here is total liabilities. So for that, let's calculate the figures. You have to go to the data sheet again. This is the total of liabilities. This divided by again total liabilities, and make sure you remove this. And copy it across. Next you have your share capital. So this will be your equity share capital divided by total liabilities. This is your equity share capital. Divided by total liabilities. And similarly you can copy it over here also. Control V. If you check this, this is B58 divided by B61. Check in the sheet, data sheet, B58 reserves. Okay, so this is divided by B61. This way, this is your correct calculation is correct, and you can drill it across or you can copy the cells. So you've got the entire figure here. Okay, we'll convert it into percentage like this later on. Let me first calculate the figures. Now the calculation of total assets. So first here we have net block. First we calculate the total assets, which is over here. If you see this sheet, now you see this is the liability. This is the total of liabilities, this line. Okay, you can see 6086.33. If you see now assets, this is total of assets 6086. So you must be wondering what is this other part over here, because assets end over here. This is the total of assets, this is the total of liabilities. So if you see in the other assets, these three are included with certain other assets. So it is important here. If you have been provided with other assets, it's fine, but you have to calculate other assets here. Also you have to calculate the common size of other assets. Also we have to calculate common size of these three values which are already included in other assets. So that means it is a duplicate entry over here. It is being recorded, double entry you can say. The effect will be double if you do not separate it. So here I will find out the other assets, which is equal to this 1632 minus sum of receivables, inventory, cash and bank. And I will calculate it till the end. Now if you check the assets part over here, so net block till investment, then if you add receivables, sorry, just select net block till investment, then select your receivables, inventory, cash and bank and other assets that we have calculated. This is equal to 6086.33, which is the total of assets and which is the total of your liabilities. So if you your sheet, the balance sheet that you are comparing, it has the other assets calculated separately, it is good. If not, then please calculate other assets this way. Now since we have calculated this, we'll quickly now find the ratio for net block and other. So first over here is total assets, which is equal to this is your total assets. Either you can take this or you can take this one, total liabilities, and anything you can take. So I'll take this divided by again this only. Now let's calculate net block over here. So this will be net block divided by total assets. Net block figure divided by total assets. Now till work in progress and till investment, I can copy this all the way, but for the calculation of other assets I have to pick up another figure. So it is not coming gradually. So for other assets, what we are going to do here, equal to, we have already calculated other assets. This is your other assets, this, divide by I do not want total here, so I will delete it. I'll take receivables. Now it is simple enough. We've calculated receivables, just drag it down, and this you can apply to entire rows over here. Okay, so this is done. Simply now you can format it, convert it. You select the entire thing. You are converting into percentage. Escape. Alt HP. Alt H0. And once more we want 2 decimal places. Okay, Alt H0. This is done. So you can see the entire balance sheet has been converted into percentages. The numbers you have converted into percentages. Total liabilities, you can make a check over here. This is the total over here. This is 100%. Similarly, you can have a check of total assets. This is also equal to 100%. So this is your common size analysis statement. You getting it's actually easy to compare statement with percentages. Right now we have done the common size statement analysis. We have done common size income statement as well as common size balance sheet of Nestle India Limited. That is one firm. If you will use it for multiple firms, which is generally and ideally this common size analysis is used to see the trends across firms in the industry. That is to identify the large changes in the different companies' financial statement, and then to compare their the companies of different sizes. So this is all about common size analysis. Hope it's clear to you. Still, if you have any queries, you can contact www.bispsolutions.com.